Hello friends, my name is Alvaro Montiel and today I'm bringing an exciting new program that would allow anyone that might be interested in buying a new primary home use the equity of their current home to buy their next property. This loan program is called a bridge loan. It allows you to use that equity that you have in your current property to use as a down payment on your next property so you can buy your next property without having to either sell or to rent your current property. The way this works is the following way. The lender is going to obviously do an appraisal on your current property, and it's going to allow you to go up to 70% of the new value or that bridge loan amount. Let's take as an example a owner that has a home that's valued currently at $300,000. That 70% of that equity would be close to $210,000. Let's say they owe $100,000 on that home because they have a mortgage for $100,000. We would have to pay off that $100,000 old mortgage, and then this person will have $110,000 on that bridge loan to be able to buy the next property, again, without having to sell or without having to rent the old departing residence. You have up to 12 months after you close on your new property to sell your previous home, and you can use part of that bridge loan funds to improve your old property if needed, to pay off debt if you need to, so you can qualify for even a bigger home on your next purchase. So you have the ability to do different things depending on your situation. But let's just say that the person is interested in buying a $400,000 new home. They could put down a 20% down payment, which is equal to $80,000, still leaving $30,000 for additional costs, moving expenses, obviously closing costs, and other things that they might need to do. Or you can also put 10% down if you qualify with a $40,000 down payment and use the difference to improve your old home so that way you can sell that home at a top dollar and much faster than you would otherwise if you would have left it or try to sell it as is. Things that you obviously should consider. Again, it allows you the ability to buy the next home without any type of contingency, whether you need to sell or rent. You have instant access to that equity the day of closing on that new home. So we would do what is called a double closing. We would close on that bridge loan in the morning of your scheduled closing for that new primary, and then you would have the funds available to close in the afternoon for that second home. You don't have to worry about moving to a temporary location if you sell first and now you're stuck with family or friends for 3 months or 6 months. Or maybe you have to start a rental agreement of 6 months to a year, and then you see most of that equity vanish now because you're paying rent. The other great point with this bridge loan is that you have 0 payments are due for 12 months on that bridge loan. So we're not going to take that new debt of that bridge loan into account when you're going to buy your next property, which is huge. A lot of the bridge loans right now allow for similar values, 70% loan to value, 75% or even 80% loan to value on that bridge loan. But then they're going to tack on a payment on that bridge loan that you have, and then that's not going to allow you to qualify for your maximum price. And going back to the 12 months, you have to better that property, to sell that property. If for whatever reason you're having issues selling the property during this time, there's also an option that you can refi into what is called a DSCR loan, where the rent of that home pays your balance, and then you can stay with an investment property and still be with your new home. Things to consider, obviously you're going to have higher costs because now you have costs on that bridge loan on top of the regular costs that you would on a traditional loan for the new property. You have a short time or a short window of 12 months to get rid of the other property that you had, or again, you can look into refinancing if you can't sell it. You will need to work also with a realtor and a good loan officer that has experience with this type of product. Since there's a lot of moving parts, you have to take into account how much you can sell your property for, your departing residence, if you need to do any improvements, how much are going to be those improvements, what the possible rental income would be for that departing residence to maybe work on a plan B if you need to refinance in the future since you can't sell it. So it's really important that you work with somebody that has a lot of experience. I'll be more than happy to talk with you. If you get in contact with me, you have my phone number, you have my email, and it will take a 10-15 minute call to see if this might work for you. So we look forward to helping you. If you have any comments, any concerns, please reach out. Thank you so much for watching. God bless.